Well, they were some pretty scary stories about mould and heat strokes and people dying of cancer. So I won't be talking through anything like that today. I will be talking through what's happening in the market because obviously things have changed a lot. So if I was doing this presentation last year, people were feeling very anxious when they were looking to buy. The market was moving very, very quickly. Prices were increasing at an incredible rate. We were starting to see some suburbs growing at 10 and 20% every 1 to 2 months, as an example. Now we are in a really different environment, and price growth really has started to turn. It's no longer such a buyer's market, so not so much a seller's market. We have now turned into more of a buyer's market. So better news for buyers. The challenge, of course, though, interest rates are rising pretty quickly at the moment. So today what I'm going to talk about a little bit about the economy, because I wouldn't be an economist if I didn't do that. But I'm also going to talk through more particularly what's happening to the property market, look at some of the places that are still seeing price growth. You know, we are seeing quite different conditions depending on where you are in Australia. And then talk a bit about rental growth, yields. I'm sure there's some of you that are quite avid investors in the room. And then looking longer term as some of the areas that we've seen a ton of growth. And they, you know, not necessarily to say that those areas will continue to see growth, but they do give you an idea of some of the trends that we are seeing around Australia. So just starting with how the economy is going, and if you have been following the news, you would think it is a lot of doom and gloom out there, but things are moving okay. You know, we are seeing really good economic growth. If you don't have a job, it's easier to find a job, it's easier to get a pay rise than it has been. And we're also seeing unemployment rate continuing to trend down. And we're in such a strong position at the moment that we've never seen a situation where the number of job vacancies is exactly matching the number of unemployed people. So it is quite an unusual environment. The economy's moving okay. We do have lots of jobs out there. But then the really big problem is that prices are rising really quickly. And to try and calm the market down, to try and calm that price growth down, the Reserve Bank now is coming in and they're increasing interest rates really, really quickly. So in the space of half a year, the cash rate's gone from 0.1 to 2.6%. We're probably in for a couple more rate rises. I think that's something always to keep in mind if you are looking to buy property at the moment. We are looking at least 1 to 2 increases more for the remainder of the year. But at this stage, the market is pricing in interest rates to really start to stabilise at the start of next year. So there's a lot of pain that comes with interest rates, but ideally we will start to see that pain start to stabilise. Lots of real challenges around construction costs. So if you are looking to build, this is really something to keep in mind. They have increased a lot since last year, and you can see here by state, South Australia has seen the biggest 10% increase in construction costs. Any of you that are looking to renovate, anyone that's looking to build, really important when you're talking to your builder or to your developer or who you're buying the home from, just get an understanding of what their outlook is for construction costs. Because on one hand, we have seen them increase a lot, but on the other hand, we are starting to hear some signs that things are really getting a little bit better. So supply chains are becoming unblocked. We are hearing labour shortages aren't as acute as they once were. And as a result, construction costs are still rising, but hopefully we won't see such a big jump as we've seen over the last 12 months, over the next 12 months. So looking around Australia, I don't know how many of you are looking not just in Melbourne, but looking elsewhere around Australia. One of the things that really drives property market population growth, and you can see here the last 2 years, a lot of people have moved to Perth, and Perth has seen the most population growth in Australia. I don't know how they all got to Perth because it was a really hard city to get into over the last 2 years, but nearly 75,000 people moved, or not move, but that was the population growth in Perth over the past 12 months. Melbourne, by comparison, here in Melbourne, we did lose a lot of people, and we lost a lot of people to elsewhere because Melbourne, we did go through some really, really tough times with lockdowns and the like. Good news is that won't happen in the next 12 months, and the reason it won't happen is international migration is starting up again. The federal government has increased the migration cap. That means more people will come to Australia than otherwise would, we hope. We hope that people continue to see Australia as attractive. And as a result, Melbourne and also Sydney, which are key attractors from overseas, will see greater levels of population growth. So looking in the past, we always look at the past and think, well, that will happen in the future. In this case, it is looking like Melbourne is going to be a lot better. Melbourne is highly livable. It did come up as being the most livable city this year from the Economist Intelligence Unit. So, they do a lot of work to calculate these things. And as a result, Melbourne is expected to do pretty well over the next 12 months. In terms of pricing, one of the most incredible things that happened in Australia during the pandemic and pretty much everywhere around the world was that we saw the highest level of house price growth ever recorded. So we'd never seen so much, such a jump ever in Australia. So you can see here, this is house prices going back to 1980. They kind of, move along pretty well. We talk a lot about house price crashes, but you can see here from this chart, we don't really ever see them in Australia. We saw one once. The only house price crash we ever really saw was Sydney, post-global financial crisis, when prices came back about 17%. But then they did jump up really, really quickly again. So you can see here, this is what happens in Australia. We have this period of growth that comes back a bit. We have another period of growth. And then the pandemic, of course, happened and interest rates got really low. People weren't spending money on anything. Everyone became really interested in property and prices shot up incredibly. So they did increase by 30% in Australia. We saw this incredible movement to regional Australia. So regional Australia saw the highest level of population growth that it ever recorded. And we also saw a really high demand for bigger homes and bigger blocks and people looking for space primarily and not so worried about being close to the city because when you work from home, even 1 or 2 days a week, it's no longer so necessary to be close to a CBD. So there was lots and lots of changes that came about. So the worst of the pandemic is behind us. Interest rates are rising, and then you can see there that prices have started to come back. And depending where you are, they have come back a lot in Sydney. So Sydney pricing has dropped by about 9% at this point. Sydney, though, Sydney's house prices increased by $500,000 in 1 year, the median. They've come back about 100,000. So again, we haven't gone back to the beginning, or we haven't even gone back to the beginning of last year. We've probably come back to, sort of earlier this year in terms of Sydney's pricing. But elsewhere around Australia, you can see there it's a little bit more mixed. Adelaide has done incredibly well. It's only just starting to come off from very, very strong growth. We've had incredible growth in Sunshine Coast and the Gold Coast. So Sunshine Coast and Gold Coast, their medians were sitting around 750,000 pre-pandemic. They are now more expensive than Melbourne. So I never thought I'd say that, but they are incredibly expensive now. The other one that's done really well is Canberra. Again, lots of government employment. And then elsewhere, you can see there Hobart, is looking pretty expensive at the moment. Brisbane's gone up quite a bit. But overall, prices have started to pull back. So it's a calmer market, but it is definitely a slower market. So I guess the one type of person that probably doesn't like transacting in this market are house flippers, people that buy and sell really quickly. It's not a market to do that right now. It is a market that if you are looking to take your time, make a decision, it's a much slower market which makes that decision-making process a lot easier. If you are an investor, one of the things that you possibly would be, or you're likely to be interested in, is what's happening with rental growth. And unlike pricing, which really has started to come back, Rents are moving at a very accelerated rate at the moment. So again, you know, we talk a lot about this has never happened before. We've never seen this level of rental growth. Really stressful if you're a renter, obviously. In many cases now, it actually can be better to be a buyer, even though interest rates are rising and it's becoming more expensive to hold a mortgage. Because rents are moving so quickly, it is looking very, very expensive to be a renter at this point. The city that's seen the most rental growth is Darwin and also Perth. So coming back to that population growth, that's really creating a lot of pressure there. Here in Melbourne, rents have increased by about 9%. So Melbourne didn't have that population pressure. It did have a lot of other pressures. Wealth effects really drove it. We also saw a lot more household formation. So unlike pricing I mentioned before, this won't stop. We're going to see this to keep going for quite some time, and the reason being migration's starting up again, more people are moving to Melbourne, and we're also seeing a shortage of housing being developed. So, and that's because of those rising construction costs. We're just not seeing enough development that Melbourne needs, or indeed Australia needs. So we really need all those builders to get out there and supply more housing for us. In terms of the slowdown, I guess one of the other things really to keep in mind, I mean, you know, a lot of people like a fast market, they like prices to move quickly, but the reality is that Australia is a very unaffordable country. We're the second least affordable country in... Speaking in a seminar at 1:30. So 1:30 for Woodrow Finance. So if we kept going in terms of price growth, Australia would have hit a $1 million median, and Sydney would have hit almost a $2.3 million median. So clearly that is a problem.
Our next speaker from Woodrow Finance will be speaking in the seminar at 1:30.
So clearly would have been a problem. So Australia's expensive. We did have to have a slowdown, but obviously it does create problems for some people. So when will the market recover? A lot has to do with when interest rate rises stop. So really things will start to stabilise once interest rates stop increasing. At the moment, there's quite a bit of uncertainty as to when they'll stop. One of the things we focus on a lot, or we look at quite closely, is the level of bidding activity. And bidding activity at auction does give us an idea how people are feeling at the moment. You know, if you're bidding, you're pretty, showing that you're pretty interested in buying a property. And at the moment, we're slowly seeing it increase. So it's nowhere near where it was mid last year. You can see there was just a real frenzy around the market mid last year, but things are gradually improving. So I think this is the thing with the market at the moment. It's not moving quickly. We're not seeing huge amounts of price growth, but people are starting to feel a little bit more confident than they were mid-year. I'm just going to move along pretty quickly because I'm probably going to run out of time fairly soon. But in terms of rents, you can see there how much rental growth occurred amongst houses and units in Australia through the pandemic. They're still increasing. And then really, again, coming back to the fact that there's not enough rental properties in Australia. So I have talked a lot about that, the fact that we've got a rental shortage, we've got a lot of people living here. There's really just not enough rental property. So if you are an investor, I do encourage you because you will help to solve this problem. And then I suppose one person's pain is another person's gain, and when we look at the problems facing renters, on one hand really challenging with the amounts of rent they're having to pay, but as an investor we are starting to see rental yields start to improve. So they did hit rock bottom during the pandemic because house prices moved so much and rents weren't moving as quickly, but that's now switching around, and you can see there what's happening with yields. They are starting to tick up. And then, of course, really, with interest rates, we are seeing fewer investors, we're seeing fewer owner-occupiers in the market, and that really comes through in the lending data that we see through the ABS. So right now, I do think it is actually not a bad time to be an investor. As I mentioned before, if you were someone that was wanting to buy and sell quickly, not great, but there's certainly, more bargains out there. More people more willing to make a deal than perhaps it was, certainly compared to where it was last year. And then one group that's really not active at the moment are first home buyers. We have seen a really large drop-off in the level of first home buyer activity. That has a lot to do with the levels of incentives that were around last year. So there was a lot of home builder in particular, a lot of first home buyers jumped into the market off the back of home builder because there was some extra money available. I don't think it's too bad a time to be a first home buyer. You know, on one hand, you know, you've got to make sure that you can pay off your loan. So, you know, making sure you've got enough funds. But again, at the same time, the market's pretty slow. You don't need to rush. We know first home buyers hate fast markets because it's kind of stressful, you know, the first big decision that you ever make. And then as a first home buyer, I think one of the things that I really the point that I like to make with first home buyers is don't look short term, look long term around being a homeowner, because if you hit retirement and you're still a renter, the likelihood of you being in poverty is much higher. And this is not just me saying that, the Reserve Bank has said that this is one of the challenges in Australia. If you rent long term, you hit retirement, you're still paying rent, you're still paying market rent, you're not going to do as well financially as someone that owns their own property and doesn't need to pay month to month, because hopefully by that point they have paid off their property. So I'm just going to run through, just given I'm running out of time, just having a look at some of the areas we're still seeing price growth. So hopefully you can see that. It's probably a little bit small, some of the text, but on the left you can see that Queensland and South Australia are the areas that prices are still moving relatively quickly. So Brisbane inner city in particular, we have seen pretty big jumps still over the past 12 months. And then if we go to regional Australia, a lot of beachside areas are still moving. So this is, this is a trend that has been happening long term. People want to be near water, and it can be a river, it can be a lake, it can be a beach, but prices do seem to move better if there is some water feature nearby. And then when we look at the places that they've fallen the most, it is Sydney, so particularly northern beaches of Sydney. So that area did jump up a lot in the last 12 months. It has pulled back. And then when we go to regional areas, there are just a lot of areas that are quite dependent on agriculture, not doing as well. New South Wales, far west, are quite isolated areas. So they're the areas, they're not actually even decreasing at this point, but they're certainly not seeing the rate of growth that we're seeing elsewhere. And then looking at rents, the areas seeing the biggest jumps in rents are Sydney, and so quite different. The pricing's coming back, but rents are increasing. And then Queensland really dominates with that rental growth. So there's been a lot of coverage around the problems that regional Queensland, also Brisbane, are facing with rental affordability. They just haven't built enough homes, and they do need to move pretty quickly to try and help people that are under a lot of rental stress at the moment. Finishing off with just some fun ones, looking at the most expensive streets. Wolseley Road, Point Piper, is sitting at a 32.5 mil median, so it's certainly no bargains to be found there. But then, again, you can see very much Sydney dominated. And then the most expensive streets in regional Australia, pretty much all beachside, a lot of Sunshine Coast there. So Sunshine Coast has really seen a resetting in its pricing, and Sunshine Beach in particular, it's sitting at around a $3.2 million median. So it's almost the same price as buying in Toorak now. Probably a lot of Toorak people own a house there, I would imagine, but it's become incredibly expensive over the past 2 years. If you want to find a bargain, these are really cheap places. No surprises there. A lot of South Australian northern suburbs, so Davern Park, Elizabeth is on there as well. Also Armidale in WA. So, when we talk about pricing in Australia, how expensive it is, these may not, they're clearly not the nicest streets in Australia, but you can still get homes for quite low cost. And then when we have a look at the regional areas, they're really cheap. I'm sure in Princess Street in Norseman, you're going to get a pretty basic home for 40 grand, but they're cheap for a reason, obviously. But what's interesting about really low-cost areas, you can get a decent yield. So often the yields are pretty high. So that's something to consider if you are investing in property. And then finally, just to give you an idea of how much pricing's moved in Australia, where you should have bought, you can see there, there's some Melbourne areas that are on the list. So Melbourne inner south, for example, was sitting under $500,000 median 20 years ago. It's now sitting at about 1.7 million. And then, as I mentioned before, Sunshine Coast, Gold Coast, really the areas that we have seen just incredible increases over a prolonged period. So again, I guess one of the other things to really point out there is beach, water. These have been the themes that have featured a lot in pricing over the past 20 years. Whether it will be like that in the next 20 years with what's happening with flooding in particular, we know how problematic that is at the moment here in Melbourne and elsewhere around Australia. But there's this definite move for people to want to be near nature, near the beach, near water. So I'm going to finish up there, and I know Nigel is going to kick off for the next session. So thanks for having me.
We have a little bit more time.
Oh, good. Oh, I moved that quickly.
So thank you so much for being here. I was just wondering, does anyone have any questions for Nerida? Any questions about the housing market? I found it really interesting. Yes, hold on. I'll give this mic to you.
Yep. Hi.
Can you hear me?
Yeah, perfect.
I joined your presentation a little bit late, so apologies, you may have covered this. I just wanted to understand, when you talk about population growth and dwelling shortage in Australia, in particular in Victoria, can you put numbers to speak to that in terms of dwelling shortage? And if possible, can you segment it any further? You talked about people over 50 or older people having housing crisis situation.
Yeah.
So can you put some numbers to that?
I can't, not off the top of my head. I mean, it's very hard to measure exact numbers of housing shortages. So at a very low income level, when we look at crisis housing, the government does track that pretty closely, social housing, because it's so critical. But I think the things that we need to look at are rental stress, because that's a key outcome of housing shortages. And there's twice as many people under rental stress than there are under mortgage stress. And that's problematic because renters tend to be younger, they tend to be lower income. And then also, I think the other problem too is with the housing shortage is we know in markets where there's lots of housing being provided, we do see greater levels of affordability. So at its most extreme, you look at Melbourne CBD, and I know, a lot of people are very critical with the amount of development that took place there, but, you can get an apartment for a relatively cheap price compared to the rest of the world, basically. So there's no other capital city in the world where I think you could buy an apartment for $500,000. And so, that level of supply there was really good. And then you look in, the inner east of Melbourne, which is highly desirable. You can't get affordability there because it's really hard for them to provide more housing. So there's all these problems that kind of flow on and cause a lot of issues for a lot of people when we don't supply enough homes. Thanks.
Were there any other questions for Nerida? No? Amazing. Well, thank you so much for your time today, Nerida.
Thanks.
It was wonderful to meet you.
Thank you. Yeah, you too.
Thank you.